I'm Michael Fox, and this is the Prospector Podcast. And I'm joining me all the way from Frankfurt, Germany, friend and colleague Kai Hoffman of Soar Financial.
Hey, Mike, how's it going?
Not too bad. We saw each other in Beaver Creek, but we were both pretty tired, and we were enjoying our breakfast and decided to postpone this until now, when everyone kind of got back into our home offices. But the last time you and I recorded a podcast, as we said off camera, is way back in May when we were together in New York at the conference that was put on by Tim Elch and the New York chapter of the SME. At that time, the financing for junior mining was not looking particularly happy for this year, but you thought that maybe things would change through the fall, and they appear to be that. So let's take a quick review of the year and the state of resource financings.
Yeah, absolutely. Well, the start of the year was absolutely abysmal. We all know that. I don't think we were telling anybody anything new, but sentiment was bleak. Although money was still being raised, but only at the really high end of the market, meaning late stage explorers, developers, companies that already had studies out were raising money. And we just chatted before hitting the record button when we spoke in May. We've done a bit of a cross-cut and looked at financings back in May. It's only $1.4 billion were raised within our coverage universe. And now we're sitting at $2.8 billion. So something's picked up. And it's not just the gold price. So we're sitting at 27.30 right now as we speak. So it's not just the gold price has picked up, but also sentiment has changed. We've seen Fed rate cut impact sentiment in general. Like we've seen the same thing in March 2022, just on the opposite end of the spectrum, where risk capital just completely disappeared. Now we're seeing it come back. So it coincides, of course, with a phenomenal gold price environment and lots of other factors, macro factors hitting sort of the tape here pretty much on a daily basis. Doesn't matter if it's geopolitics, if it's a BRICS meeting in Russia, if it's central bank buying for various reasons. So there's lots going on and lots going in our favor. And in terms of financing sentiment, it's completely changed as well. So I got off the phone with a company earlier today, and they've been presenting, or they've been raising money in just offered at $8 million financing, and they said we could have oversold it 3, 4, 5 times, but we don't want to do that. So people are throwing money around. Wallets are open. A perfect time to raise capital, I think, is right now. We'll see how it goes until the end of the year. The language from the Fed is clear. They want to keep cutting rates, so that's positive for us. That we are desperate for risk. I honestly cannot put a finger on is flow-through financings for Canadian companies and projects. Rules have changed this year, so investors will only be able to claim a third of what they used to. So meaning they would only invest a third as well. So we need 3 times more flow-through takers. And I'm not sure that we have that and we can cover that. So we'll have to see how that is impacting the Canadian financing market, Mike.
Yeah, it's the government every once in a while throw a wrench into everything, and they're trying to fix something that clearly wasn't broken before, but that's what they choose to do. What I find particularly remarkable about this current run of things is it's all run counter-seasonal. Like typically the summer months are quiet for raising money for the gold price, the silver price. And we've had rallies and across that. And as you said, we've gone from 1.3 to 2.9 in a period of time that typically is a quiet period. And we may come in a little under last year's amount of fundraising, but not significantly. And considering how poor the start of the year is, this is quite a remarkable end of the year.
Oh, 100%. $2.9 million at this point is remarkable. Last year, we raised $4.6 billion, which was surprisingly on the high end, or came in higher than I had personally expected, given sentiment that we discussed before. Are we going to reach that number again this year? I don't know. The start of the year was so slow, and even the summer was really slow. So it's only been ever since Beaver Creek, pretty much since we've seen each other, Mike, in Colorado, sentiment has changed. And I posted on Twitter and or X and LinkedIn one of my observations from the conference. A lot of people, it resonated with a lot of people because I said we're in the final stage of grief, which is acceptance. Nobody's complained about the market environment, and nobody's complained about low share prices, not the companies, not the investors. And that was a very interesting observation, I thought, because months earlier, people were just completely crying on my shoulder about the market environment. Doesn't matter if it was investors or shareholders, companies, and that's changed, and that is good to see. And it's been up, but the market has been trending upward since. So it pays to go to conferences to gauge what sentiment is like.
Oh no, absolutely. And if you had taken a look at Beaver Creek a year ago, we talk about the accept, that was the acceptance level of grief. We were kind of in that capitulation level of the market where everyone just had kind of got to the point where they just, they realized that the market was just going to be bad. And they got to the point where they thought that maybe it wasn't ever going to change. So then fast forward a year, and I can only speak anecdotally for, the volume of work that I've had since Beaver Creek. And it's just like somebody turned on a fire hose. It's been just overwhelming on some days where, the volume of stuff that's crossing my desk is, on the magnitude of 3 to 5 times a normal day when, things were. And a normal day when things weren't going so well, this is probably, 8 to 10 times busier. So, yeah, it's the market sentiment has definitely changed. And I know like on Fridays, that's kind of private placement closure day. That's when a lot of the placements close and we get the press releases about that. And since Beaver Creek, there's been more placements closed for larger dollars and for, some pretty decent terms. So they're not dropping their trousers to get deals done. They're getting them done for, in this environment is fair market value.
Yeah, yes and no. A lot of companies still have to offer at least a half warrant. I've been seeing that, but terms are getting shorter. It's not like 3-year warrants anymore, or 3-year full warrants at barely above placement price. So that has changed. I've seen a financing recently that came out 12 months, and then a big shareholder came in and is like, "Hey, we'd love to put a lot of money in, buy almost up to 9% of the company. Can you give us 18?" And it's like, okay, like 18 months, half warrant. Like it's okay. Right. So those terms are changing. We're seeing that, which is trending in the positive direction. But I don't think companies are in a position yet where they can necessarily dictate terms. We're still in an environment where they're happy to take the money. And maybe it's also a new feeling for a lot of the companies that there's actually money even on the table for them. And so they will have to play ball with the investors still.
Yeah, but they are cautiously optimistic and being a little bit oversold. They are taking some of that overage, but they're not taking all of it. So they're being smart in that they're not diluting the shareholders too badly in that way and waiting for another time. But they are taking the extra money just in case the party ends abruptly, right? So
Exactly. That's what the company said this morning to me as well. Is that Kai would love we'd love to take more money, but we don't want to dilute, so we're cutting it. We're not having the financing upsized, and anybody who wants to buy needs to buy in the market, which is also a good thing. And I hope that drives prices higher in general. That the investors that get cut out or maybe cut short in a placement, that they do come into the financing, that they actually want to come and support the company in a meaningful way. Outside of the financing terms, and that would help. That helps everybody, keeps dilution lower, and let's just hope we're back to a healthy market. We'll see. In 4 months, what it looks like. As you said, PDAC curse. A lot of financings come free trading. We'll see how it goes.
yeah, no, they do. But I'm also looking ahead here. We're coming up to year end, and there was a lot of stocks that did really well. And then, there's the usual stock loss selling that happens in December, and those tend to hit the resource stocks pretty heavy. What's your thoughts on this year, being that it's been a pretty good year for gains within these resource stocks?
Good question. I'm not sure I have an opinion just yet or formed yet because it's a fairly new environment we're in. Like the gains have only shown up really the last 3 weeks, 4 weeks maybe, because a lot of investors that have remained left in the space probably bought into the stocks at much higher levels, right? I'm one of those guys. Like I should have cost averaged down like every normal person does, but I usually buy once and I hold my stock. I'm loyal. I should be trading a bit more. But I think a lot of investors are, let's say, for lack of a better term, like loyal that way, meaning they own the stock. They might have held through the bottom and now the stock is coming up. Maybe they're just breaking even now. I've just broken even on a couple stocks that have been holding for a while that have been underwater. So that's a bit tough to gauge, quite honestly. The S&P sure has been doing well. GDX is now up, what is it, 43.5%. GDXJ is up 48.5%. So people are definitely sitting on some gains, but I'd say it's more of a lower percentile that's completely up the full percentage volume here.
Yeah, you're probably right in that, there are been people that have been holding on for quite a while. So, yeah, I can say the same thing. I've got a few stocks that all of a sudden are finally, after a couple of years of poor markets, are kind of back in the green again. But, you and I invest very similarly. We look for quality companies that, have good projects. And, sometimes we hold through a bad market just because we still believe that in the long run, we're gonna end up being right about the company, the management, and the project. So, for right or for wrong, I personally, I don't like to get overly cute in what I'm doing by trying to, gauge my way in and out of stocks, because I always figure if I get too cute, all of a sudden I'll lock myself out of the house, so to speak.
Absolutely. No, I was mentioning like in our last conversation that our PR business is actually a really interesting gauge for sentiment as well. Because when the companies are confident, they come out and do marketing. They're willing to spend money. They're willing to tell a story. And when we spoke in May, that was absolutely not the case. Companies were so worried about the money they had in the treasury, and it doesn't mean that they were blowing their brains out marketing. Even a $5,000 spent Canadian was too much for many. Or do a little bit of marketing in general, and that has changed. As you said, like we're also much busier. Our conference is a good indicator. A lot more interest in presenting to our investor base here in Europe, and that's an interesting gauge, right? Because I stood on the stage at Deutsche Goldmesse in May and said this is the bottom, and I might not have nailed it on the day, but I was awfully close.
It's strange though, yeah. Like we're getting growth on our end of the PR business as well, and but it's funny. Like a year ago, I could have told you where my growth was going to come from within a bundle of 12 to 16 companies, and there was going to be 6 or 7 of those that would end up working with us. This year, we're getting the same level of growth as we had last year, but I can honestly sit here and say to you, Kai, not a single company that is contracted us to work with them this year was on my radar in January at all as being a prospective customer.
Oh
It's
no,
it's been kind of a funny year that way.
yeah, interesting. Like, because you might have like laid the foundation for that relationship years ago, and now companies are coming back. Like we're seeing that companies we talked to years ago are coming back now, right? They're starting to spend now because they might have raised money or they feel comfortable spending what they have. And yeah, it might not be the obvious choice here, or the obvious call, but yes, that's exactly what we're seeing, and then I can definitely second what you just mentioned here, Mike.
Yeah, and as I say, it's just you like to think you know what's going to happen, but it happens, but it's not the way you think it's going to sometimes. So it's just it's kind of like the way the markets have kind of rolled out for everybody. They are coming around the way we thought they were going to, but not in the way that we thought they were going to go that way. So we kind of go around full circle that way. Now you mentioned the May gold mice. You've got another one coming up here fairly quickly here in November. But before I get you to pitch your event here, there's always been something that I found interesting in all of this is that in Germany, where you're located, there is a very substantial pocket of investors that have always historically liked the idea of investing in Canadian mining stocks. And, you see that with listings on the Frankfurt Exchange. You see that with, people spending a fair amount of time dealing with German investors. Like all my clients will go over to Europe, to Germany at some point in the year to visit with German investors. So, what is it about Canadian mining stocks that, for lack of a better way of putting it, tickles the German investors' fancy?
It's a good question. Like my simple answer is we're also degenerate gamblers, right? But I think it's more historical, or the reason is more historical than one might believe. So we've had the Weimar hyperinflation, of course. So Germans definitely understand gold, and they want to make a return. So gold stocks offer the best leverage, obviously, and that's one of the reasons they've been having some success in the previous markets, but also. And that's one thing that irks me. A lot of the companies perceive Germany and German investors as dumb money, right? They've been fleeced a ton of times as well. But the long answer or short answer to your question is it's in our DNA. Through historical events, it's been embedded that we like gold, or we have to like gold to preserve wealth. And if we do want to make some money on top of it, and the kicker is that we do buy some stocks and participate on the upside in that regard. So it's not just protecting our wealth, it's also making money by also betting on the rising gold price.
Okay, so when companies go over to Germany, do they present themselves differently to that German audience than they do to a North American audience? So is there something, or is it just that the nature of their business is just more appealing to the Germans?
I sometimes wish they would present differently, but I think the company CEOs, or many of them, just have one presentation up their sleeve, and they can't really deviate. They forget that Germans are not technical at all. Yes, we do follow the mining space, and we're non-technical investors. Like one thing that irks me a little bit as well, like we don't travel as much as North Americans, meaning we don't fly to New York for 2 days just to go attend a conference. I might be the exception here, but it's pretty common to fly from Vancouver to New York for a 2-day conference. Germans don't do that. I barely get the Germans on a train to Frankfurt, right? And we have fast trains, Wi-Fi, and a kitchen on board. So Germans are a bit different in that regard. And I wish the American or the Canadian CEOs would tailor their presentation more to that audience, because they keep showing up with long sections, cross sections, geophysical results and surveys telling people that the pink is the important stuff, but nobody understands it, right? They're non-technical, they're retail investors, they have their heart in the right place, they often get taken advantage of based on lack of knowledge. And I wish the CEOs would take that more into consideration and actually pitch their stories in a way people could understand it.
Yeah, I can't say I disagree with that at all. Even in North America, like I would laugh in Beaver Creek because I'd read everybody's presentation before I sat in on the meeting, so I had questions, and so I would sit down and they would always want to go to their presentations. Just like, I've read that already. Can you answer these questions? And it just completely flummoxed some of them to the point where they'd have to try and mentally go through their presentation to get to where the question was being asked in order to be able to answer it. It was actually a little bit amusing at times. So we did get good answers to the questions, but yeah, it seemed to mess them up when they weren't set in their presentation.
Yeah, no, and our German investors at the conference, and I'm a bit surprised as well, but they do show up with questions, as you said. Like they show up with a piece of paper full of questions when they come into a one-on-one meeting, which is a bit different from North America as well. I'd say, because I've really experienced that the investors are well prepared. They often like to get pitched. They're interested in the stories, but they come ill prepared. And I'm maybe one of those investors as well, because I like hearing a story from the ground up, without having like any premonitions, just to get a first impression on how the CEO pitches a story. And then maybe for the second go around, I have some questions prepared. But on the first go around, I want a clean piece of paper that I can take my notes on. But the German investor thinks it's rude to show up unprepared, and they show up with massive amount of notes. So I'm really impressed by that, and it's something I wasn't really aware, but Germans do that, and companies love it.
Yeah, no, I got to think the company's would. You've got an engaged investor. So, with that said, let's talk about your event that's coming up in November.
Oh, 100%. No, Mike, appreciate the opportunity. So next event is coming up November 21st and 22nd in Frankfurt, Germany. We're still at the Western Grand, probably like one of the better locations in Frankfurt, smack downtown. We have 6 keynote speakers joining us: Clem Chambers of ADVFN, Keith Neumeyer, everybody knows, the phenomenal Matthew Piepenberg, Hendrik Zeeberg. If you're a gold bug, you know Hendrik. He's a bit of a controversial character because he keeps calling for a crash in gold before a massive rally. We're in the rally stage already, so I'm curious if he got rid of his crash forecast, or whether the crash is just going to be much harder and faster and quicker than maybe everybody else anticipates. We have Christopher Schmidt joining us. He's with Incomet Capital. They're a fund out of Munich, but they're excellent junior mining investors. They've been able to grow that fund, and he's going to tell us how we can invest in junior mining and how we can avoid some of the pitfalls, especially now that all the cream is rising to the top, and the tide lifts all boats, and we do have to be selective here. And then Garrett Goggin is joining us. He's the founder and chief analyst over at the Golden Portfolio. He used to be with Stansberry for like 15 years, which is a long time. And I'm really happy that they're all coming out. Like Clem is coming out of France, Garrett Goggin is flying over from the US, Matthew Piepenberg from Geneva. So they're making the trek. And of course, we've got 24 phenomenal companies. First Majestic, because Keith is there, but we have Gogol joining us. We have Cartier Resources joining us. We have a private company, or now listed company, Argenta Silver, joining us. Dolly Varden, just to name a few, Pan Global, Yukon Metals, Meridian Mining, Palomina, and you can find all the details, of course, on our website, deutschegoldmesse.com, germangoldshow.com, and for accredited investors, it's free to register, and we'd love to meet as many as possible, Mike.
Wonderful. If you guys are over in Europe, that's an excellent show for you to be attending. And as you could probably gauge from the speakers, you're going to hear some speakers that you don't necessarily hear in North America that often. So that's it's a good opportunity. Kai, thank you very much for joining me, and I look forward to when our paths cross next, be it in London in December or Vancouver in January.
Likewise, Mike, always a pleasure to chat with you, man. Thank you.
Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.